Checking on the sound, checking on the sound. Yep, it seems like the audio is all right. And yeah, just wait for a little bit, then we will get started on today's sections. Wait for the others to get in. And just like I said just now, because but the audio is not on just now, so I will just repeat again. So in today's we will talk about ICT, the inner cycle traders, and also SMC, which is a smart money concept. And these two technical analysis method is very famous in among the short-term traders, the cycles. And I believe that if you do learn about technical analysis, this is the terms that you definitely heard about. And I will just tell you that what is the difference in between and which one should you choose according to your preference, your situations, your available time, and the asset that you are going to trade about. So just like an example, if you are going to trade for a very volatile asset like Bitcoin or like gold, then this kind of asset, I believe that ICT is more suitable when comparing to SMC. So they have different uh, problem to tackle about, and we'll go through it bit by bit later on. Let's wait for another 2 minutes, then we'll get started on today's topic. So let's wait no more, and then we shall get started on today's topic. And first of all, I will just introduce about ICT first, then we will move into the smart money concept afterwards. So when we talk about ICT, is the theory that raised by Michael Hudson, and it's talking about the core principle here is to just is to follow according to the institution's actions. So he believed that the market is manipulated by the large institutions, and then he will just control the price, control the market to just sweep up all the stop loss of the retail investor and traders. So this is what he talked about. So he's saying that the market is manipulated by large institution. And we will talk about price, and we will talk about liquidity hunting. Okay. So if you are a trader and you do have your own method, and then you're wondering about why your stop loss keep on going to just get hit and go. Like sometimes you set a stop loss there, and then he just come down to hit your stop loss before he go to your TP. And if you just go through this many times, and then you will find out that the ICT method do talk about the same principle as you think, so that he think that the pricing of the market is actually manipulated by all those institutions, and what they do is actually they're going to hunt all those liquidity provided by the retail investor, so that he will just trying to make the money from all of us. just based on our where you can just see that where is our stop loss and they're going to hunt us down. So there's also one say that maybe your stop loss is the best entry. This is because of if you just put your entry at your stop loss, then when the others get to swipe up, when the majority of the player get to just get stop up, then you will be the only survivor there. So in that case, you were just playing along together with the larger institutions. So this is what he said. And if you do learn about ICT, you learn about some tools like liquidity pool, order block, fair value gap. Yeah, something similar like that. So this is all the terms that are using by the inner cycle traders. And actually, you can find many tutorials online that talk about how to do all these kind of analysis. So in today's sections, we'll just talk about the general view of what is the characteristic of this kind of technical analysis and which one should you choose and what is the type that I'm using currently. And then where you can utilize the ICT market is that actually you can, if you want to just use it for day trading, I would say scenario. So in day trading, actually, if you do trade about Forex, I would say. So if you do trade about Forex, there were claims that because there are three sections in the Forex market, which is the Asian sections, the London section, and also the New York section. So the claims that every time when a new session is going to start, they will try to hunt the liquidity from the previous sessions. So if for example, in today's gold market, in the London sections, the price actions keep on going down and down and down. So the market is in a very bearish movement. So if they are going to hunt it, what they will do is that they're actually trying in the New York session, they are trying to just climb up and then they will hit the top pricings among the London sections, then they will come down afterwards. So it's just like a very fake break of the previous section high, and then they will come down afterwards. That is what we call a liquidity hunt of the previous sections. So if you are not going to trade for day tradings, you are going to trade for a longer period, then you might find out that you can use a larger time frame to check on, like a daily time frame or a weekly time frame. So for example, nowadays, Nvidia and Tesla actually just standing firm on the support, which you can just find on the chart, and we have talked about it in the previous sections and so on. So that when this kind of support is so firm and so solid, and sometimes they will just get to have a lower wick, a bottom wick to just crash on all of the stop loss, and then they will just keep on climbing up. So if you are going to trade for the ICT method, what you can do is actually, the better case is that you wait for a liquidity hunt, you wait for a liquidity sweep. So when it hit the support, you didn't get in first. You wait for another swipe to the low. Afterwards, when all the players is getting swiped up and it start to going up, and you can draw a fair value gap or order block. And then that is the place that you can get into your positions where you can pen your buy limit order at the fair value gap or at the order block. That the liquidity sweep that will just create a latest support for your entry. So this is how they are doing things. So they won't go in for the first second when it touch a resistance or a support. Meanwhile, they will just wait for a response afterwards. And sometimes that response will just clean out majority of the player in the market. Okay, so let's talk about the pros and cons. So if you talk about the pro and cons, the pro is that you need to have a very it's very logic if you think it that way. But it depends on your own preference. Either you agree with the core principle or the idea or not. Which because I didn't just work in a larger institution before, so that if you ask me if this kind of liquidity sweep really exists in the market, personally, I do not agree with that because, first of all, it's not a verified fact that is provided by any insiders. And second, I believe that the larger institutions have a lot more money when comparing to a retail investor. So why would they just bother to do something like this to hunt our money? And when you have larger money, sometimes the trade, the management, the trade management, which is also the execution, will greatly reduce because you will tend to have trade for a larger time frame, or you will just become a longer term investor instead. Because when you have a larger capitals and you are doing such a high frequency trading, the the trading fees solely will just consume a lot of your money. So they will try to just reduce the frequency of their trading, and they will just become a longer term investor and traders, like a swing trades or even a longer time frame investor. So I don't believe that this kind of liquidity sweep do exist in the market, even though sometimes you can check on the chart that this kind of events do happens very occasionally, but because this is not verified yet and I'm not an insider there, I didn't just work there and do such execution. So it depends. Just like you either you believe in Christian or Buddhas, so this is all of your own choice. But the pro is that at least this is very logic, I would say. And it requires you to have understanding on market behavior. So nowadays, if you're going to learn about ICT, you're not going to just learn about the chart, the candlestick, the high and low, and the indicators. They don't use indicator at all, which is MACD and RSI and everything. So they're trying to just interpret the meaning that represented by the candle itself. So they will just believe that every move will represent a significant market behavior. And they were just trying to make these things logic and then trying to just profit from that. So if you are very rational people, I believe that this is actually quite fit to your characteristic. And but the con is that it requires a very long terms of a longer period of time, longer time to recognize all these kind of patterns, market behavior and pattern. Which I believe this is also very makes sense. It's because that even though you're trying to just get a degree or for a diploma, just trying to pursue achievement in your academy, in your educations, it also take you some time, like 3 to 4 years to just study one of the topics to just get your certifications, So I believe that take a longer time to just master one skill is very important to do so. And this skill will not just bring you a job opportunity. Meanwhile, it can just keep on generate you the money, the income that able for you to sustain your life and even can get you retired earlier and then have your own financial freedom, time freedom, and have a very beautiful life. So I believe that if you want to become a successful trader, you will need to spend a lot of time in studying, in doing research, in just not just about learning all those knowledge. It's all about learning yourself. Just trying to dig out what is your characteristic, what is the like are you a disciplined people, a patient people, and what is your characteristic? If you are not the type that very patient, then maybe you can become a scalper, and there will be a very different play, and you will need to have a very high intense of focus to do so. So trading is actually a very difficult game to do so. And later on, we'll also talk about the success rate of all these kind of methods. Okay, so now we talk about smart money concept. So when we're talking about the smart money concept actually focus on the market structures. And this kind, he think that the market structures, the candle itself, already bring out all the news, the market sentimentals, that and just pricing in everything, and you can just get to know everything purely from the chart itself. So he focus on tools. And he what is the main focus beside market structure is that they think that supply and demand is the most important thing, which is actually true though. So the main concept here is actually to just recognize where's the place that all those institutions will just build their portfolio, build their positions, and then they will just trade according to the trend. This is very important. Meanwhile, ICT is trying to just get to analyze the market behavior and then take the actions according to the institution. Meanwhile, if you are going to do for the smart money concept, the main focus here is actually the market structures and trade with the trend. So it's aside from the ICT, where the ICT will be more suitable for day trading. Meanwhile, in day trading, sometimes you will get to have a long position or a short positions. But for the smart money concept, you will just check on a larger picture when you're comparing to a smaller picture. So sometimes you will just it doesn't support you to do some kind of the like a reverse impulse trading or reverse positions according against the trend. Then what is the tools that is going to use in smart money concept? First of all, the market structure break. Second, the imbalance and balance. Third, break and retest. Yeah. So this is actually the tools that is going to use by smart money concept. And this is also the skill that I'm being utilized all the time when I'm not aware of that is the same concept as the smart money concept, because previously I start trading in the Malaysian market, which is the FKLI and also the FCPO. So when I'm doing the FCPO, I'm trying to just use the structures to trade. Like if this is a higher high, higher low, and then I will just keep on going for long for the whole day. If there's no opportunity, I will just keep my hand empty. And then for the imbalance and balance is that when there's a gap, up or gap down, it will create the imbalance and balance. And what we mean by balance is that there is a zone of the consolidations happen. So when there's a break among the zone, outside of the zone, then that is what we call a break of the balance and also a market structure break. And that is also quite a good entry for your positions. So afterwards, if you miss out the first breakout and then it come back, that is what we call a break and retest, which is a more secure way to do so. But somehow you will just miss out because sometimes when you break out, the longer time that it consolidate, the higher that it will go. So sometimes there will be no retest at all, and then you will miss out some of the trade. So when I comparing to the first one, where I'm trying to guess on the market behavior, what the institution will do. Actually, I do prefer the smart money concept when comparing to the ICT, because when ICT is trying to analyze the market structures, and all the analysis actually is not verified by the insider. They are trying to guess their thought and just trying to just do the same action as the larger institution will do. Meanwhile, the smart money concept is actually trying to just teach you how to just read on the market structures, the trends, and the strength of the trends. So it's like you will get to know that what is the direction that we need to do for your positions. And what is the scenario that you are going to use? Actually, I will say that mostly it will be a swing trades, because when you are trying to do a trade with the trend, is what you call trade with the trends, then you will just try to just make your risk to reward ratio a lot higher when comparing to a day trading. Meanwhile, you are trying to just catch on the whole wave of the trend afterwards. So a swing trading will be more comfortable if you are going to use the smart money concept, because if you are going to use it for the day trading, it's also applicable. It's just that you're not able to catch the whole wave, because the shorter the time frame, there will be more noise in the market. Sometimes you just make the price to move in a reverse directions in a very specific time, like a spike during the news and some kind like that. And now we'll talk about the pro and con. The pro and con is, when we talk about the pro, it's very good to identify the trend. And we are talking about the con is that if you have a lot of fake out, is what we call fake out in the breakout. So fake breakout, okay, happen. So sometimes you will need to have your own filter to just to filter out all these kind of breakout. Like if the breakout is happen in the low trading sections, then it's high likely to become a fake breakout. So you need to have your own filter to just add on to the smart money concept. So actually, they have a very different pattern to do so. And let's talk about the characteristic that fit to all these kind of trading methods. So if you are going to trade with ICT, for now, ICT is famous among Europeans and also the East Asians. So I would say that majority of the traders that trade with ICT is having a 6 to 12-month experience in trading. So I will still call it a beginner. And then they're trying to just follow along with the larger institution to get a quick profit. And sometimes they hate that they just have a stereotype on the other trading methods, like the indicators, the traditional indicators are like MACD and RSI, because they're trying to just over persuade about a micro analysis on the candle behavior. So let's look at the research that I have done, and we will know that what is the percentage that is going to become a successful trader if you are going to use for ICT. So the percentage that you are going to become a successful trader with the ICT is 5 to 10%. Let me check again. Yep. So 5 to 10%. So if you do a research about that, you'll find out that there's a few hundred thousands of the traders that is going to use ICT, but only 5 to 10% of them are able to success. So even though this is very good, I would say that this is a very good figures to talk about, because 5 to 10% is already a lot when you're comparing to the other method. Because if you are going to use for smart money concept, it will only bring you for 5 to 8%. But I believe that there might be some difference among them, because the traders that are going to use for ICT is a lot larger when you're comparing to the smart money concept, because the storytelling is more favorable in that way, because you are talking about what the institution is doing. They are hunting us, so that we are the main characteristic among them, among the story. So when you're comparing to the smart money concept is more I would say it's more similar when you're comparing to a traditional technical analysis method. So smart money concept is more easier to learn, and then the ICT market is more attractive in their storytelling, because it's talking about the trap that is setting up by the larger institutions, and also they are hunting us down. So we want to become the survival among the hunting game. So you can see that no matter what is the method that you are going to use, the success rate of becoming a successful trader is relatively low when comparing to the founders of the technical analysis method. So even though they are able to success with that method, it doesn't mean that you will be able to success in the same way. So actually, for me personally, I would prefer the smart money concept. Meanwhile, I will also take note about the liquidity hunting. So if both of them just align together in multiple time frame, then I will make on my trades. So even though I would say that the chances is unlikely to happen frequently in the day, but this is my way of doing things. So I would say that fit to this one is actually fit to a higher frequency trading. Catching the reversal. Then this one is more fit to a very patient investor, disciplined investor, let's say. Not patience. Trend trading and discipline. So it depends on what is the method that you are is going to fit for you. And personally, I find that it also differs according to the asset that you're going to trade with. If you are going to trade for a very high volatile a very volatile asset, then this is actually better, like Bitcoin and gold. Meanwhile, if you are going to trade like the index, I would say SPY 500, DE 40, these kind of things, then actually the smart money concept will be a little bit better when you're comparing to ICT, because now you are trained. If you check on the SPY 500 chart, this is actually a long-term uptrend in the past 10 years, in the past 20 years. So no matter where you get into it, if you are a long positions, then you are highly likely to be in profit. So this is not only the index, you can also trade with the asset that have a very clear directions, a very clear trends to trade with. So this is all about the ICT and the SMC. But if you want to become a successful trader, actually, I would suggest you to learn both of them and then make your own unique technical analysis method, your own setup, your own, I would say the anti-criteria. So just like the Raja Banks and also like the Tom Straits, all of them are very successful traders in the world. But you can find out that actually they didn't use any of the ICT or the SMC thing. Somehow you'll find that maybe some part of their concept is very similar to the SMC, which is also the structural break and retesting like that, and also the liquidity huntings and the flip of the candles, like the time correlations and something like that. But actually they do have their own unique way to do so. So I would actually suggest you to learn from the market and then trying to just develop your own trading plan instead of following them. Because if you follow them, the success rate is just it's just 5 to 10. So if you want to become a successful trader, I would actually recommend you to develop your own trading plan instead. But first, stick to one specific asset to trade with. So if you're going to trade with futures, trade with futures. If you're going to trade with commodities, then go with it. Or Bitcoin, cryptocurrency, it depends. But try not to switch among the counters, and then try not to switch your trading plan very frequently. So you can find that below there, I actually share about my own personal contact in the Telegram. And if you are interested to just talk with me, you can feel free to do so. Or if you are going to, if Telegram is not friendly for you and you are going to trade with, chat with me with WeChat and WeCom, then this is my business contact. But if you are going to talk about stock and technical analysis, I would recommend you to actually talk with me with Telegram instead, because this is a very sensitive financial advice instead. So Telegram will be more easier for me to giving out such a advice, or what we say, help to you. Meanwhile, in the business context, there's some restriction in the financial advice. So yeah, it depends on what your needs. And this is the QR for the Telegram group. And this is a very new group to form, and hopefully we can grow the community together again. And thanks for you all for joining. And if you do not have any other questions, we will end for our session right over here. Okay, thank you for joining and hope you guys have a wonderful evening.